Welcome FFG. My name is Bill Butler. I'm the Regional Manager for the Phoenix, Arizona region. And I'm excited to be with you today because I've been asked to talk about basically the two products that we sell and to try to help you better understand them and how they compare with other index products. In this session, we're calling this the AVIVA Index Products Level 100. And then I've also been asked to do a Level 200 where we will compare with everything else out there, everything else in the financial industry, okay? So let's get started. Now, as a salesperson, all of you have had sales experience. I would suggest in this room maybe 250 years of sales experience, okay? But have you ever had the perfect product to sell? Okay, the perfect product, next, would be something that everybody wants, wouldn't it? And they don't have. And they don't know where to go to get it. Wouldn't that be ideal as a salesperson? Well, I'm not suggesting everybody wants Index Life, but what they want is the benefits it offers. Growth, safety, and tax-free. That should be a very easy wish list. It's only 3 items. But where else can you get all 3? There's lots of things that'll give growth and safety and tax-free, just not all in the same retirement vehicle. So let's speak about vehicles. How many of you have at least 2 vehicles between you and your wife? Okay? Let me ask you a question. Which would you pick if tomorrow you went out to the driveway and one had the gas but no brake, and the other had the brake but no gas? Think about it. Which one would you drive? Well, you know, the right answer is you wouldn't want to get neither one, right? Because this one had the gas but no brake. You're going to get hurt in that one. This one's not going to ever leave the driveway. Neither one's going to accomplish your goal. And now here's the analogy. All vehicles come with both. You've got to have both, right? Without gas, you're not going to get anywhere. Without a brake, you're going to get hurt. And it's just one or the other. But your retirement vehicle needs both also. The equivalent of gas would be growth. That's where you're going to get where you want to go financially. The equivalent of brake would be safety. That's what's going to keep you from getting hurt. And just as it's imperative that you have both in a regular vehicle, it's just as critical in our way of thinking that you have the equivalent of both in your retirement vehicle. Does that make sense? Like this? Okay. Now, let's see what FFG does. What do we do? I wonder. Well, I think we help educate people on money. How it works, how it can work harder for them. And we determine what their needs and wants are. Because you know what? People buy things that they need or want. Luckily for us, people need a better financial future. And they want it as well. So we get both of them going in. Then we suggest a solution. Come back on our second appointment and we give them a solution. Typically it's going to be an Index Life product. And that would be a good fit if they don't have a large amount of money to start with, but they do have the ability to put away some money on a monthly basis. And or they have the need for insurance. You know, there's a lot of studies out there and only about 1/3 of the American population even have life insurance. The other product we have is the indexed annuity, and that's usually done if people have a lump sum of money somewhere. Transferring money to a place that would be an improvement for them. And we'll talk more about this in detail. So why AVIVA? You know, there's a lot of insurance companies out there, and FFG doesn't have a captive contract. Did you know that? You don't have to sell exclusively for AVIVA. So we have options. We can represent the best the industry has to offer. Yet there are several reasons why AVIVA is our preferred provider. And so why is Index Life our primary product? Again, they want the benefits. Why do people buy a drill? They don't want the drill, but they want the benefits. They want the holes. Why does life insurance, or how does your retirement vehicle look? Okay, your life insurance retirement vehicle. Whole life is slow but safe. When whole life came around, this is what a vehicle looked like. Okay? It's been around a long time. But then variable life came along. Boy, variable life, now it's fast but dangerous because it doesn't have safety. Lots of growth, just no safety. And so it maybe looked like this. But do you see how both of these are extremes? People weren't happy with the whole life because there wasn't any growth to speak of. Then variable life came along in the 90s and everybody loved it. Lots of fast growth. And who cared about safety? Because the market was just going up and away. But now people are as equally concerned with safety as they are growth. So the index life was created to try to give you the safety of whole life and the growth of variable life. It has sizzle. It's not the steak, it's the sizzle that sells. Let's see what an index life vehicle looks like. Pretty nice. Not quite as souped up and fancy as a super fast sports car, but probably one you'd still like to drive. This is the latest Mercedes car. Now, let's look at the index life products compared to other index life companies. All index life products offer an improvement over whole life, universal, and variable life because they combine the growth and safety together. So what is it that makes the index life, what does it offer? Well, hey, how about this? Flip-up doors. Have you ever seen a car like that? I know you're looking at this just chomping to get into this one, aren't you? This looks like Gordon, and he drives a Mercedes too. Does it look like this?
Not quite.
Okay, the flip-up doors might be features that index life offers, such as market participation in the good years and guarantees against loss in the bad years. Okay? All index life products provide that. They're all good-looking products, a good-looking vehicle. Maybe it's the flip-up trunk. That would be a nice feature. You ever seen one like that? Well, all index products also provide tax-free access through loan provisions and family protection with a death benefit. So this product not only provides the growth, the safety, the tax-free that everybody wants, but it throws in a fourth one as a bonus, the family protection. So what is it that makes, if all index products have that kind of a vehicle, what is it that's really unique about this particular vehicle, the AVIVA Index Life product? Well, it's what's inside that makes the difference. Look at how unique this one is. What's missing? The steering wheel. Wait a minute. How are you going to drive a car without a steering wheel? And there's something else missing. There's no pedals. Wait a minute. No steering wheel, no gas, no brake. How do you drive this thing? With a joystick. This vehicle is operated the same way as arcade games are. And what's scary is, our kids would be able to drive this better than we can. So, what is it specifically about AVIVA? Well, one thing we can't overlook is the history. In this 6-year window, AVIVA was not only #1 every year, but pulling further and further ahead of the competition. As a matter of fact, in this year, they sold more than the other 4 top companies put together. Now, you don't see any company with that kind of dominance very often. And when they do, it's a pretty good indication they put together a better mousetrap, so to speak. So let's look at a list of unique features specifically to the Lifetime Builder product. Why sell the rest when you can sell the best? Looking back at that slide, why would you recommend anybody but AVIVA? This product is so unique that it actually has a patent. It's the only index life product that has the 2% guarantee over a 5-year window. Now that's important because clients want confidence. Okay, they want a safety net. They want ideally that they're not only going to not lose money, but they know they're going to make at least a little bit. The problem is that guarantee gets pretty expensive, especially if it was a 2% guarantee every year. This is 2% over a 5-year period, which means over 5 years they'll guarantee that you'll make at least 10% over 5 years. And if you don't, they will retroactively go back and make up the difference. So you're, in essence, assured that you're going to make some good money over, or some reasonable amount of growth over 5 years. The good news for AVIVA is, historically, there's a lot of years where the market loses money, maybe even 2 or 3 years in a 5-year window. But that means that they still have a couple of years where it made money. And if overall there was at least 10% growth, which is pretty easy to do if you never count the negatives going negative, you don't have to dig out of the hole, then that means you're giving them confidence without it costing a lot. If it doesn't cost the company a lot, that means there's less cost coming out of your premium and more going into your retirement plan. It's actually patented. Nobody else can do it now. Another thing that's unique to our product is the wellness rider. Actually, it should be wellness rider, not wealth rider. And it's unique because it's a combination of AVIVA and Mayo clinics forming together and rewarding us for maintaining good health. You know, oftentimes you get a good driver discount on car insurance, or maybe a non-smoker discount on health insurance. Why not a healthy lifestyle benefit on your life insurance? That's what this does. All you have to do is see a doctor every 2 years and stay within a normal height-weight ratio. Another difference, 100% participation. Let me ask you this, would you rather have an index life product with a 20% rider and a 50% participation, or a 12% cap and 100% participation? Well, if you think about it, the market would have to make 20% for you to get 10, if all you can do is 50% of what the market does. On the other hand, with the 100% participation, all the market has to do for you to make 10 is for it to make 10. Much higher likelihood. And the fact that it's guaranteed never to be lower than that is a huge deal. The Life Protector Rider is another big deal, especially for people that are in their retirement years. They've been pulling out this tax-free income for 20 years, and now they're 85 years old, and they get a 1099 for $800,000. Why? Because the policy lapsed. They kept all this money coming out, and that was great until it ran out. And now Uncle Sam is expecting you to pay taxes on $800,000 all at once. Now, you made it to 85, but you may not make it to 86 if you get one of those in the mail. Another factor, a feature that's unique to this product is a 1% loyalty bonus. What that means is if you've been with them for 10 years or more, starting in the 11th year on for as long as you own the policy, whatever the S&P does, they will not only credit you 100% of that, but that plus an additional whole percent. So if the S&P makes 10%, after the 10th year, you would make 11. And that's guaranteed as well. Another feature that's unique, or at least very rare, maybe 10% of the policies out there offer what's called a zero net wash product, where you are credited and charged the same amount on the loans. And that's a really good deal compared to most. However, AVIVA also has a variable loan provision, where you can be credited based on what the S&P does and charged based on what the Moody's corporate bond rate does. And so every year that the stocks outperform the bonds, which historically has been about 3/4 of the years, then you would actually make money on the money that they're loaning you. And what's really nice, you have the ability to go from one to the other and back and forth a few times throughout your retirement years. And you don't have to make the decision until you start retiring which one you want. Another feature, How big is it to be able to tell people that not only do you like the product, but I have good news. The guarantees that this product offers is backed by one of the biggest companies in the world. Number 5 out of 5,000 life insurance companies, and in the top 50 of any kind of company in the world, based on the Forbes top 50 list that came out. Also, the oldest out of 5,000 life insurance companies, none of them have been around longer than AVIVA, over 320 years old. And as they say, that's actually even older than gravity. Why? Because Isaac Newton discovered gravity less than 320 years ago. Another factor, the proof is in the pudding. This product is #1 in the industry and has been every quarter since 2000. Now think about that. Not only every year, that's over the last dozen years, but this is from an independent research evaluating how much success each company has, each product has had. The AVIVA Index Life products have been #1 each quarter, which makes 48 in a row. Why would you want to sell something else when you know that that's available? This gives the client confidence. And if they're not confident in the company and the product, they're not going to want to do it. Another thing that's unique, I've never seen another product, Index Life or even other products like IRAs and 401ks, that for the same money going in, for the same years and the same interest rate, could generate as big a retirement income for the rest of their life. And isn't that what people really want at that stage? And then those are all benefits that are good for the client. Actually, there's a few good for us as well. If a company does advance on commissions, it's typically a 6-month advance. This is a 12-month advance. You know, it's not often you can collect a check for $250 from the client and get a paycheck of $1,500 coming back. Not bad. Another benefit, it has a high target limit. What that means is you get paid on a higher amount. A lot of products, the target and the minimum are the same. But if the target is significantly higher than the minimum, that means you're getting a commission on a significantly higher amount. And not only that, but even if it takes into the second year to collect all of that target premium, because they're just putting in the minimum, you would still get a first-year commission no matter how long it takes to collect target. So that's a pretty impressive list that nobody else has on their specific products. So that's one reason that, actually several reasons, why we're selling the index products, specifically the Index Life product. But what about annuities? Let's talk annuities. First, let's define what an annuity is. I believe the best definition I can give you of what an annuity is that it's not life insurance, but it's retirement income insurance. Okay? Now think about it. Don't we insure a lot of things in our life? Cars, houses, health, to name a few. But how many people are insuring their retirement income? And wouldn't that be one of your more valuable assets to insure at that stage of life? What I mean by that is they ensure that the income will keep coming no matter how long you live. With every other product, when the money runs out, the income stops. And you know what? That's the biggest financial fear of seniors in this country, is outliving their money. And annuities are the only product that can actually give you a written guaranteed income for life. Now, first there were fixed annuities. Fixed annuities started, I don't know, I would guess over 50 years ago. They're similar to a CD in the sense that they have a guaranteed growth. That's good. And unlike a CD, they grow tax deferred. So that's even better. Of course, the problem is it doesn't grow at a very big rate of return. So as people started seeing the stock market take off in the 80s and 90s, they were looking for more growth. And so then the variable annuity was born. The variable annuity, much like a variable life, gave you more growth. It gave you all of the growth potential of a mutual fund. The problem is, of course, with the higher growth comes higher risk. Now the indexed annuities came along to try to offer the best of both. The growth of variable annuities and the safety of fixed annuities combined into one vehicle again. Now all annuities grow tax deferred as well, with or without the IRA umbrella. It can be part of an IRA, but it's growing tax deferred even without it. So let's imagine a retirement plan with all of these benefits. You can participate in the market growth in the good years, have guaranteed no loss in the bad years, grow tax deferred, have no costs or fees at all taken out. If they give you a check for $100,000, on their statement they're going to see $100,000. Not a penny is taken out. Now that doesn't mean there aren't costs or fees. It means they don't have to pay them. Okay? The insurance company pays them for it. That includes our commission. 100% is working for you. And some indexed annuities will even give you a bonus to start your plan. If you moved in $100,000, you're going to be presently $5,000 richer just for making that transfer. So what's the catch? With all those benefits, there's got to be a catch. All the providing company asks is time. Okay? They're asking for a certain amount of time, typically 10 to 15 years. So this is not a get-rich-quick scheme. This is a way you put some money aside, give it at least 10 or 15 years to grow, and then pull off an income, typically for the rest of your life. So how does the AVIVA indexed annuity compare with others? Well, let's first look at what they have in common with other indexed annuities. The specific product we're talking about is the income preferred bonus compared to other indexed annuities. They all offer that market growth percentage and no market risk. They all offer tax deferred growth and free withdrawals. Now the percentage varies a little bit on the products in this case, but the AVIVA product allows a 10% per year free withdrawal starting in the second year. You can do 5% in the first year and 10% each year after that. And that's sort of the norm for the industry. There's some that allow a little bit less or a little more, but that's the norm. No costs or fees, as we mentioned. They're all covered by the insurance company if they give it time. Now, they also offer a lifetime income, although it varies how they offer it. For some, to get the lifetime income, you have to annuitize. And that means you're giving up the value in exchange for an income, which works out great as long as you retire and live a long time. But if you happen to die a lot earlier than expected, then it's a real good deal for the insurance company. We're going to talk more about that in just a minute. Another thing that a lot of people are not aware of is that the indexed annuity actually is a unique tool in that it avoids probate. Meaning if you died, your annuity would go directly to the beneficiaries and not have to go through probate. And another benefit is if you are sued and you lose a lawsuit, they can't get at the assets in your annuity. So that's a list of a lot of good benefits. But to be honest, that's pretty common among any indexed annuity. So what's different about this particular annuity? Well, it does have a bonus, where most indexed annuities do not. Currently, it's at 5%. The minimum dollars required to start is $5,000. Now, a lot of them are $10,000 or more. And a lot of people don't have $10,000 or more. So that could be problematic. It also offers an income rider. Some other indexed annuities do, but not all of them. The advantage of a rider, well, first of all, a rider is an option, isn't it? It's not a requirement, it's an option. This particular option costs 0.75% is the cost for the rider. Okay? 0.75% or 75 basis points. The name of the rider is called the Income Edge Plus. Now, why would anybody spend extra on that rider? Well, to get an extra benefit back. The extra benefit is that you get a second value. Not only the annuity value, but an income value. Now the income value is guaranteeing that your income value will grow by 6.2% a year, which is guaranteeing that you'll get a full amount of money back in about 12 years. The confinement income, if you're confined in a nursing home type of facility, it actually will double your payout for as long as you're in there. So that's a form of a long-term care insurance. It's not to replace long-term care, but it certainly would be a nice supplement if you ever needed that. Now there is a surrender charge with this product, which is the cost for canceling early. Remember, all they're asking is time. In this case, they're asking a 10-year time commitment, and the 12% penalty will go all the way down to 0 over a 10-year period. Another feature that's nice with this specific indexed annuity is that it's very easy to transfer money from the indexed annuity to the indexed life product to get the added tax-free benefits. And you can do it without the 10% IRS penalty through a feature called the 72T transfer, where you can transfer typically about 5% a year from the indexed annuity into actually wherever you want. But where better to put it than a place that can have growth, safety, and tax-free benefits. Now think about it. If it's guaranteed to grow by 6.2% and you're pulling out 5%, 10, 15, 20 years down the road, wouldn't it make sense that your income value will actually not have decreased at all? As a matter of fact, it would be bigger than what you started with. Does that make sense? Because you are guaranteed to grow more than you're pulling out. The other thing that's nice is because you're pulling out about 5% and you have a 10% free withdrawal, that means there's no surrender charge as well. So you can literally move the money over without the IRS penalty and without surrender charges. Now, it would be a taxable event, but there would be no penalties. And, as we talked about a little earlier, you can actually pull out a lifetime income without having to annuitize, without making that trade and giving the insurance company your big nest egg. Now, that's important for a couple of reasons. Not only will there be a beneficiary or a benefit to the beneficiaries if you died earlier than expected, while there's still value in it, but also because you can be eligible for pay raises throughout your retirement years. Okay, because every year that the market is growing throughout your retirement years, you have the ability to get a pay raise. And that can be a good inflation hedge. So again, much like the indexed life, the indexed annuity specific product that we sell has a pretty good unique feature list. And we also have the ability to illustrate with this product. What we can illustrate is 4 words that you don't see in writing very often. Imagine here, Mike, that you want this product and you're in your 40s, 30s? 30s, there you go. And we could actually guarantee you a minimum income for the rest of your life starting at 20 or 25 or 30 years down the road. You don't see these 4 words together. Guaranteed, minimum, meaning it could be bigger than that, but not less than that. And income for life, no matter how long you live. For a lot of people, that's peace of mind. And that's security. And that's what most of us want in our financial future. So when is an annuity a good option? Well, let me give you some options here. It's a good option when people have a lump sum of money. So as we meet with people and we're conducting the F&A on the first, not only do we want to ask, well, what could be a dollar amount that you could see yourself putting away for your future on a consistent basis, but also find out what other assets they have and if they're happy with them. If they have a lump sum of $5,000 or more sitting somewhere that they're not particularly happy with, then you ought to be thinking in terms of indexed annuities. Now, what are the advantages? I tell people, don't move money. I don't want you to move your money unless it's to your advantage. The only way I would ask you to move money is if, in your opinion, the pros of making the move outweigh the cons. Does that seem fair? Yeah, most people like that. So if money is in someplace safe, like a CD or a treasury bill, what's the advantage of moving it into an index annuity? More growth potential and tax-deferred benefits. What if the money's sitting in a stock or a mutual fund or an IRA? Well, then they have more safety and tax-deferred benefits. If it's in an old 401k or an IRA, they avoid market risk. They still have the same tax advantages because these also grow tax-deferred, but that's a big deal to get out of the market. Now, usually this product is nice because it doesn't affect their monthly budget. You might come across someone that literally tells you, I can't put away an extra dime a month for my future. I'm just real tight on cash flow right now. But you find out that they do have this old 401k from their previous job that's already dedicated for their retirement. So you may be able to help them with this product because it doesn't affect their budget at all. Think of this as an example. It's like it's still their money, but you're moving their money from the left pocket that has a hole in it, which means money can fall out. Have you ever had coins fall out of a pocket? Yeah. Well, and move it over to the right pocket that has no hole in it. Now it's safe, but it's still their money. Okay? And that's the end. Thank you very much. Hey, if nothing else, we ended on time.